Oh, here we go. Big banks getting ready to report their earnings on Friday. And ahead of that, Wells Fargo gets upgraded to overweight Piper. It was also named the top 2022 pick at Morgan Stanley. We've made it our call of the day today, at least one of them. As a result of all that, Piper goes to $64 from 50. Morgan Stanley's target is 61. Wells hasn't been trading where it is since September of 2018. It's off to a riveting start this year. It's up 17.5%, yet for some reason nobody on the desk owns it. Steve Weiss, why is that?
You know, I've looked at it, and I do really admire the CEO. He's pretty accomplished. He's been doing the right things, been patient. But
Charlie Scharf?
I mean, it's kind of sad this is their top. Yeah, Charlie Scharf. But it's kind of sad that their top pick has 10% upside. I think there's much greater upside in some of the others. Wells Fargo never really reflected the poor funding. Well, I think Goldman, for example, that's what I own. I believe B of A still has plenty of room to the upside. Wells Fargo never fully reflected the poor fundamentals, so it's been paid for in advance when Charlie came on board. So that's why I'm not that excited about it. Look, I think it'll go up with the others, but in terms of leveraged interest rates, I like Goldman and I like B of A much better.
Jenny, what do you make of Wells?
I think we need to give Stephanie Link a lot of credit for being the one who is timely and early with this. It's up 66% in the last 52 weeks, 17% year to date. And I like the call. We'd actually been doing work on it, and we're just slow. So we didn't get in, and I regret not having gotten in earlier. And I read the analyst calls, and I think they're good. So there's not there's not likely to be 66% ahead of it. But I think there's decent upside from here. So I regret not owning it right now.
Okay, good looking out for the Linkster. I'm sure she'll appreciate that. She does deserve props on that. So, Joe, and then I want Dr. J's opinion, too. But Joe Kramer was talking about this morning as being just the worst setup possible for Wells. It's run a lot into the number, and Scharf is just not the kind of guy who's going to go on the call and give you some rave, glowing narrative about what's happening. It's just not his style. So what do you do with this if you're an investor here or you're thinking about buying it off of these calls that we just read you?
Okay, well, first of all, I don't own Wells. Wells has been the outperformer in a mean reversion trade. It's up 16% relative to Citi, USB, and Bank of America, which I own. They're up 11%. We know that Charlie Scharf has been excellent in reducing expenses. The prior quarters have told you that. They have to complete the consent order. The upside is that they're able to complete that faster. The question is the loan growth, and that's why I'm not in Wells Fargo, because I'm not necessarily sure you're going to see the above average, incredibly strong loan growth that Wells is going to need to catch up with a lot of the banking institutions. So I haven't been in the name, and I don't think I'll be in the name until I see that loan growth, and that's something that there's a lack of clarity towards.
Doc, man, I remember, way back when the worst of the Wells news was hitting. We're talking a few years at this point. And I mean the real worst of it, yep. Doc. You were like, come on.
Oh, yeah.
Come on. You were a buyer. But you don't own it anymore.
I was. Nope. I haven't for a couple months, Scott. Shame on me because obviously, to Joe's point, there's been some significant outperformance, especially in the short term. But I do like the other stocks in the financial sector better. Still, Scott. I mean, J.P. Morgan, Capital One, U.S. Bank. I like all of those better than Wells right here. They're getting a lot of upgrades. I mean, everybody has upgraded the stock in the last 10 days leading into this. Is Kramer right? Is it going to be a broken dream because that's just all on the table right now? They could end up pulling a rabbit out of a hat. But I'm not going to be in it right now. I haven't seen unusual activity in it for quite a while.
Hey, let me ask you real quick, and then you got to be quick. This PayPal call today.
Okay.
PayPal's been stuck. I think Kramer's called it purgatory. I mean, it just hasn't really done much of late. It's down year to date. It got downgraded today at Jefferies. And it's a stock that people watch closely and have followed some of you all in.
Yeah.
You own calls. What's the story
You bet. Here? Yeah, well, as I said, I was trying to buy it under 180. I ended up paying just over 180 for it. Yesterday, I thought I was a genius, Scott. It was up $6 through 191, and I was kind of tweeting back at my haters saying, okay, where are you now? Now today it gives up $5.50 like that. There's a lot of downgrades. This is the exact opposite of Wells Fargo. Everybody is downgrading targets, and in particular, Jefferies, of course, not only cut the target but took it to a hold. I'm still comfortable holding the stock, especially writing fat calls against it, Scott.